Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, May 6th. Hopefully, you guys aren't suffering too much of a hangover from Cinco de Mayo. Just a couple of light economic news releases scheduled for today. We got the CoreLogic home price for the month of March. So back in February, we had 11.8% year-over-year appreciation. And for the month of March, it came in at 11.1. So we had a bit of a dip in the home prices, as we kind of seen that on some of the other indexes that were gauging the home prices. So something again, this might be kind of more of a stabilizing market coming up. So that could be a good news for everybody, especially for first-time home buyers, which had a difficult time, I think I felt last year. And this year might be a little bit better year for them. So let's kind of keep our fingers crossed for them. We also got the trade deficit for the month of March. Just the news put out there, economic news was released, but not a high impact or anything for bonds. So we had basically a deficit of $41.9 billion in the month of February. It was supposed to get reduced down to $40 billion, and it came in at $40.4 billion. So it did show improvement, not quite to the forecast, but it's still quite a bit of difference. $1.5 billion is still enough, significant enough. We have headline news. So the stock market is currently down. Part of it's the global stuff. Like Ukraine concerns. OECD urged the European Central Bank to kind of lower their rates because they're having low inflation. So they're urging them to lower the rates to create a little bit more inflationary pressure on them. So because it's getting to be kind of too much of an issue over there. Of course, we got some of the stocks. There's a merger talk. There's also talk. Different earnings reports coming up. So that's just kind of what's driving the market today. Pardon me, today. So let's go ahead and take a look at the bond market, see what's going on over there, and see what interest rates are doing. So it's just kind of holding steady. It's up about 10 basis points from where we left off yesterday. We've had ups and downs, as you can see, with the star effect. So when we start seeing these star effects, what that means, you see that wicks on both sides there and kind of not much there. It's getting kind of an uncertain pattern where it could reverse or continue. So it's kind of at a standstill as to which direction it's going to take. So this is kind of where you want to be very cautious when you start seeing this type of behavior, because it could take its cue where it could sell off easily, especially if the stock market is it's due for a correction, but we don't know how much of a correction. And it's always hard to project these. So be very cautious being in this level right now, since we haven't really hit this level in quite some time. We've touched on the 104 70-ish range quite a few times and got knocked back down. But right now we're up a bit. We're touching. It looks like we even touched the 105.20 today. So again, be very cautious. All right, folks. The rates are about where we left off yesterday. We could potentially see some improvement. Like I said, we're at only about 10 basis points. All we need is 12 basis points to get a price improvement. So we're not too far off from it. All right, folks, have a great day, and thanks for watching. We'll see you guys tomorrow. We should have a bit more news. Today was the latest of this week, so we should have a little bit more news tomorrow, including Janet Yellen's testimony before Congress. So that could be interesting to see how that plays out as well tomorrow. All right, have a great day.